I hope you have taken note of what we have discussed in the first session. So in our second session, we are going to look at the examiner's remarks. This is a very, very important session, basing on the fact that I'm going to highlight some of the pitfalls that have caused very many candidates problems. And of course, I'm going to guide you on how to do in order to avoid such pitfalls. So let us start with the very first topic, which is Introduction to Financial Accounting. Introduction to Financial Accounting poor performance in this area has been caused by the following: problems in explaining each stage of the accounting cycle. You have a problem with that. Explaining each stage of the accounting cycle. Branches of accounts taken for granted. Can you imagine what people give as branches of account? First of all, first type in the chat the branches of account before I continue. Give me the branches of accounting in the chat. Branches of accounting. Let me see, because there are things they were telling me. Let me see if you're also going to give me those ones. Branches of accounting in the chat. Wilbur says cost accounting, correct? Continue. Continue. Management accounting, that is Mwanga, correct? Financial, what is this? Financial accounting. Good. Insufficient knowledge on the Impress system. As we prepare for the exam, we are going to focus on the following. 1. The working of the Impress system for petty cash. Qualitative characteristics of financial information, the accounting cycle, branches of accounting, forms of business organizations, the advantages and disadvantages. Number 2, reporting framework in Uganda. We start with the poor performance in this area. Poor performance in this area has been caused by the following: inadequate knowledge of the roles played by ISPOW, insufficient knowledge on merits that accrue to an entity which employs a professional accountant, failure to identify the roles played by the International Accounting Standards Board in the accounting profession. We should focus on the following for our exam. 1. Regulatory framework of accounting in Uganda. Who regulates accountants? Role played by the ICPAU. Advantages of employing a professional accountant. Use and application of accounting standards. Process of setting an accounting standard. Provision of the Companies Act in regard to preparation of financial statements. Harmonization and disadvantages. The Institute's Code of Ethics that provides guidance to members as they perform their professional responsibilities. Now, most of these questions are in section A. That's why you see I'm outlining. So some of them are in section A. So section A covers the entire syllabus. Okay? Section A covers the entire syllabus, but what in particular? This is what we are looking at right now. 3. Double entry ledgers and accounts. Double entry ledgers and accounts. Where do people go wrong? Poor performance in this area has been caused by the following. 1. Majority of the candidates fail to prepare the proper format of a journal for adjusting entries. They instead write in a sentence form as opposed to tabular form. These are the people who say, for me, I'm hard. In life, for me, I am hard. I'm going to write the journal and I see what they will do. We shall cross your work. We shall cross it. Yes, we shall also be hard. You think you are the only hard person? We are also hard. So, journal must be prepared in tabular. You must show the particulars, the area, particulars, the folio, debit, credit, even for members. Those who have not seen the journal, please, please, please look for it. It is in your notes. It is in what I've been sharing. Lack of knowledge of the relevant accounts to be opened as per the requirement of the question. Posting transaction to the general ledgers instead of the individual ledger accounts. Those who want to see that, verify that, look at November 2016, question 2, part B, Roman 2. Failure to distinguish between a personal and a personal account. I've talked about that one. So, what should we focus on when it comes to this area? We are going to focus on the rules of double entry. We are going to focus on the preparation of the journal. We are going to focus on how to prepare and close off T accounts. You know, this paper is filled with a lot of T accounts. Very many T accounts. All right. 4. Correction of errors. Correction of errors. This can appear in section A. It can appear as an independent number in section B. Where do people go wrong? General comment. Poorly attempted area by candidates, implying that candidates are still struggling with double entry. Candidates are still struggling with double entry. Poor performance in this area has been caused by the following: failure to provide examples of different types of errors as required in the question. For example, can you give an example of an error of omission? Can you give an example of an error of principal? Transposition error? Can you give an example? Failure on questions whose correction requires entries in more than 2 accounts. Give us an example. March 2022, question 6, part 3. Go to March 2022, question 6, part 3 of that question. You'll see an example of an error which requires correction by passing more than 2 entries. Candidates were not aware of which correction of errors required an entry through the suspense account. Now here is talking about March 2022. Not aware of which correction of errors required treatment through the suspense account. In failure to post correctly in the suspense account, including the difference as per the trial balance totals. People don't know where to take this difference. Should I take it on the debit side of the suspense account? Should I take it on the credit side of the suspense account? That discussion we have had, and me on my part, very comfortable. Very comfortable. Inability to establish the impact of correcting errors on the reported net profit. People are not able to establish the impact. So that means they fail to prepare the statement of corrected net profit. So, exam focus. Where do we focus? Grasp examples of different types of errors. Practice the rules of double entry, which form the basis of correction of errors. Practice how to correct undercast and overcast errors. Practice the preparation of suspense account. Practice the preparation of statement of corrected net profit. Bank reconciliations. Bank reconciliations. Where do people go wrong? With the adjusted cash book, the opening balance is not posted to the adjusted cash book. People forget. People forget to post the opening balance. Insufficient knowledge of items that go through the adjusted cash book. People don't know. They don't know which items are supposed to go to the adjusted cash book. Challenges in correction of errors made in the cash book. Now, this one connects with the previous one. The examiner has now taken another turn. He's combining bank reconciliation with errors. So you watch out. When it comes to the bank reconciliation statement, people do not indicate the balance as per the adjusted cash book. Seriously? You struggle with the adjusted cash book and you forget to bring the balance down to the bank reconciliation statement. So don't do that. Don't do those things. Interchanging the unpresented checks with uncredited checks. You'd actually see that this person was debating. So where should we focus when it comes to bank reconciliation as we are revising? As we are revising, we shall endeavor to learn and understand correction of cash book and bank errors. By the way, this requires grasping the effects of the various errors thoroughly well. So it goes back to the errors. It goes back to the errors. Goes back to the errors, members. 6. Control accounts. As I mentioned, these ones can appear in section A. They can appear as an independent number in section B. Where do people go wrong when it comes to control accounts? Poor performance in this area has been caused by the following. Candidates continue to fail to distinguish between cash discount and trade discount while preparing control accounts. The side where they go, most of them take these discounts to be offered after a transaction has been completed, which is totally wrong. Are required to determine the actual cash receipts from the customers and the cash payments to suppliers to be posted in the control accounts. Majority of the candidates fail to do this and instead take the total receipts and the total payments figures without subtracting the cash sales and cash purchases figures. This goes back to what I said in the reasons why people fail. Cash receipts, cash sales, cash sales and cash purchases should not touch the control accounts. So what is the examiner telling us? He's saying, tell your people, tell your candidates to revise and understand the merits and preparation of control accounts. Now this is the theory part. People fail it a lot. What is the use of control accounts? This has been evidenced by the insufficient knowledge in this particular area. But of course, we are also saying you should practice on the format of the control account. What is on the debit, what is on the credit of the receivables control account and the payables control account. Non-current assets, depreciation. This one I divided this into two: depreciation and disposals. Very, very important areas. Where do people go wrong? When it comes to depreciation, people are not conversant with the depreciation methods. Reducing balance and straight line always mixed up. Okay, reducing balance, straight line always mixed up. When they say depreciation is charged on cost, which method is that in the chart? Depreciation is charged on cost. Which method is that? Depreciation is charged on cost in the chart. Which method? Straight line. Good. Straight line method. Failing the double entry. Failing the double entry to recognize depreciation expense in the books of accounts. Someone type in the chat the double entry. The double entry to recognize depreciation in the books of accounts. Please type in the chat. Type in the chat. Type in the debit depreciation, credit depreciation. Combining depreciation expense of all depreciable assets and presenting them as one. But what causes this? Why would someone Someone, you know what people do, members, friends, what people do, if you have furniture, plant and equipment, motor vehicle, the guy depreciates the assets very well. Then on the entry, the guy combines all of them, combining depreciation expense of all depreciable assets and presenting them as one instead of presenting them individually. You see? Computation of depreciation expense continues to prove to be a problem for candidates, given the fact that majority cannot distinguish when to charge the depreciation on cost instead of book value as the question may specify. So they focus on the following: 1. Concepts of depreciation. Failing to explain residual value, depreciable amount, depreciable assets, basically the theory under depreciation, people fail. Concentrate on the treatment of transactions, incorporating part exchanges and trading. I have my old car, I want to take it to exchange and they give me a new one. How is the accounting? If I take an old asset for a new one, I think there's a question we discussed. It was a generator. We're taking an old generator and they are giving us a new one. That double entries associated with depreciation of non-current assets, the one we have just done there. Determining the value cost of a non-current asset added during the year. I think there is a good question in March. In March, I actually I'm going to bring it up for discussion when we are doing this now, the individual numbers, because after this we are going to pick numbers. Bank reconciliation, depreciation, we are going to pick numbers from different areas which they purchase an asset, maybe it is imported in Uganda, they are paying import duties, non-refundable taxes, warehousing it, insuring the asset. So people don't know how to treat those different transactions associated with the new asset that has been added to our pool of assets in the year. Computation of depreciation where there is the additions and disposals during the year. People fail to calculate depreciation for assets that have been disposed of in the year. In most cases here, you're going to focus on the policy of the company. You must focus on the policy of the company. What is the policy of the company? Do they actually depreciate when assets are being disposed of? Do they do proportionate depreciation if the asset is sold part way the year, maybe 6 months down the year? Do the company do the proportionate depreciation? You must pay attention to detail. Okay. Computation of accumulated depreciation on disposed of assets and its double entry. When you dispose of an asset, it has been depreciated over the years. It has some accumulated depreciation. How do you treat that accumulated depreciation? People confuse this and fail it. So we are focusing on it as we are doing our revision. Second part of non-current assets is on the disposals. Where do people go wrong? People fail to deal with the period of purchase. For you to be able to do the correct accounting for disposal, you must deal correctly with the period of purchase. So because of failure to deal with the period of purchase, it leads to failure in determining and including the asset balances per the different periods under consideration in the question. So I hope you don't confuse that. Where candidates are required to present clear workings on the computation and treatment of depreciation expenses to be charged per the different periods in preparing the provision for depreciation account, majority of the candidates concentrate on the final year, ignoring the past periods. Moreover, in most cases, the account is left incomplete. But what are we saying here? We have done that question. Go back to your student account. There is a question where I am doing 2016 separate from 2017, from 2018. In most cases, if there is a disposal, the examiner will give you several years, maybe 2015, 2016. So you must present, you must show the transactions for 2016, show the transactions for 2017, show the transactions for the last year, whichever year is going to focus on this. So what are we saying here? Where candidates are required to produce clear computations of accumulated depreciation of the disposed assets. To enable candidates prepare a complete disposal account, what do? The majority of the candidates do not go there. They don't go that far. They don't. Those who manage to prepare the account demonstrate insufficient knowledge of the postings and the computation of the accumulated depreciation. Allocate ample time and place emphasis on computation and accounting for depreciation and disposal of non-current assets. It is inconceivable to have a financial accounting exam without depreciation in it. 9. Accruals and prepayments. Okay, where do people go wrong? Candidates are unable to post accrued income under current assets. Instead, this is shown under current liabilities, which is totally wrong. Prepaid income reflected under current assets instead of current liabilities. So where should my students focus? Your students should focus on the treatment of accrued expenses when preparing final accounts. Treatment of prepayments when treatment of prepayments when preparing final accounts. 10. Bad debts and doubtful debts. Poor performance in this area has been caused by failure of candidates to determine the allowance for doubtful bad debts that is supposed to be included in our financial statements. Actually, here people don't fail very many things, only this allowance. When do we say there is an increase in provision? When do we say there is a decrease in provision? That's the problem. So focus on the following as you're reading. The treatment in terms of journal entries of irrecoverable debts in financial statements. Treatment of bad debts written off and subsequently paid. Treatment of doubtful debts in case of an increase or decrease in the provision for doubtful debts. This one, if you want. Number 10, manufacturing accounts. People usually go wrong, given the fact that it's well performed. By the way, this area here, it is they are free marks actually. Usually problems come with the apportionment of expenses between the manufacturing account and the statement of profit or loss. You know, with the manufacturing accounts, we have two things. We have the manufacturing account for the factory and the statement of profit or loss for the sales department. So expenses must be apportioned between the two departments, the factory and the sales department. So candidates continue to include the administration, selling and distribution expenses in the manufacturing statement. Very, very absurd. And candidates continue to find difficulties in the apportionment. So what I'm saying is, if the guy is to make things hard, he's going to make the apportionment harder. Okay? Again, there are difficulties in clearly distinguishing the selling and distribution costs from the administration costs. People do it the other way. And this is demonstrated by the inadequate knowledge on the items recorded under the different headings. Confuse the two. So as you are revising, focus on the format of the manufacturing account, focus on the format of the profit or loss account, clearly getting to understand what should be classified under administration, what should be classified under selling and distribution. Non-profits. Non-profits, number 11. Where do people go wrong here? Majority of the candidates continue to display insufficient knowledge on the treatment of subscription in arrears and subscription in advance. I saw that failure to prepare the accumulated fund on the profits. This is the statement of affairs. Mix-up of expenses in the statement of profit or loss with those in the statement of income and expenditure. Candidates are always not sure of what transactions to include under the different statements. True. This is true. People don't know what to put under. You know, non-profits usually run a profit-driven activity, like maybe a bar, like maybe a cafeteria, a bakery. Those are the numbers that have been set. So because of that, there is always a component of profit, and you must prepare the profit or loss, determine the profit from that trading activity or commercial activity. So there is always confusion. So what are we going to focus on right here? As you're revising, you're going to focus on the preparation of the subscription account. You're going to focus on the apportionment of expenses between the profit and loss account and the income and expenditure account. However, partnerships. Now, when the partnerships are set, where do people go wrong? Poor performance in this area has been caused by the following. Majority of the candidates cannot explain the Ghana versus Murray. Appropriations in the capital account instead of posting these in the current account. Reflecting appropriations. These appropriations, like for the partners' salaries, interest on capital, drawings, interest on drawings, people actually take these to the capital account instead of taking these to the current accounts. Posting interest in the capital, posting interest on capital in the capital account, maybe because the word is capital, that's why they take this interest to the capital account. That was my understanding of this. Otherwise, why would you do this? Why would you do this? Why would you take interest on capital to the capital account? Don't do that. Non-separating the capital account from the current account as per the requirement of the question. This is what people do. When the examiner says prepare the partner's capital and current accounts, people mix the two. Please, you must separate them. If you want to look at the nature of the question, look at March 2022, question 4. Look at March. You should concentrate on this. 1. The explanation of the rule under Ghana and Murray. Preparation of the realization account. Preparation of the revaluation account. Preparation of the partnership capital and current accounts. Describing the methods of accounting for goodwill. Preparation of profit and loss appropriation account, studying critically the transactions that go through the capital and current account. Is that it? Next, company accounts. Where do people go wrong? Poor performance in this area has been caused by the following. Majority of the candidates do not understand that the share capital account has to be prepared separately from the share premium account. Candidates continue to exhibit inability to compute the ordinary share capital after issue of shares at a premium. This indicates inadequate knowledge of what constitutes ordinary share capital. Really, not much here, not much. What should you focus on? Preparation of the statement of changes in equity, which we have done. Treatment of revaluation surplus and impairment loss. Determining the account to be recognized in the share capital and share premium account after issue of shares. Accounting for share application, allotment and share call. Theoretical aspects of this topic. For example, authorized share capital. What is authorized share capital? What is the called up, paid up share capital? People ignore. Without incomplete records. Where do people find difficulties? People ignore the preparation of the statement of affairs to determine the opening capital balance. This one I don't think you can. Failure to derive the credit sales from the trade receivables account to add to the cash sales to get the total sales. People fail to derive credit purchases from the trade payables account to add to the cash purchases to get the total purchases for the year. Expenses such as salaries, utilities, loan interest that need to be adjusted to get the expense to be charged to the P&L continue to pose great challenges to many candidates. Candidates continue to indicate drawings as expenses, which is conceptually wrong. Drawings are not expenses. I repeat. Insufficient knowledge of dealing with gross margin and markup ratios, when handling incomplete records. Majority of the candidates do not include the year's depreciation expense. By the way, this is, we don't know what is happening. People do not, you want us to say, please don't forget the depreciation? You want something like that? Please don't forget. I don't know. How do we communicate this? Because people totally fail. You know, when there is an incomplete record, there are assets. Those assets must be depreciated. The depreciation charge must be included in the statement of profit or loss. Why are you leaving it out? So this affects the asset figures in the statement of financial position. You can't get these figures correct. Okay. This demonstrates lack of inadequate knowledge on the treatment of depreciation expense in preparation of financial statements from incomplete records. So where should we focus when you are reading? Preparation of the statement of affairs, margin and markup ratios, deriving credit sales from trade receivables account, deriving credit purchases from trade payables account, deriving the expenditure for the year for accruals and prepayments, deriving and treating of drawings made by the business owner proprietor. 15. Cash flows. All right, under cash flows, poor performance in this area has been caused by several issues. Number one, candidates not taking keen interest in the theoretical aspects of the topic. Candidates manage to identify the components of the statement of cash flows. However, these are explained in terms of the English language usage, not as per the standard. Candidates find difficulties in making adjustment or adjusting entries necessary for the preparation of statement of cash flows, as evidenced by the fact that candidates fail to provide workings for depreciation, loss on disposal, acquisition of property, plant and equipment, proceeds from sale of non-current assets, interest paid, tax paid, and interest received. If you fail to compute these items, then you cannot proceed with the cash flow statement. Under the operating activities, candidates fail to explain why changes in working capital are considered in computing net cash flows used from operating activities. Candidates should have to realize that it is not a matter of just listing the working capital items, but also understanding the meaning behind why those items appear in the working capital section of the cash flow statement. Candidates continue to mention operating expenses as examples of cash flow used in operating activities. This is totally wrong, and you shouldn't do it in the exam. Under the investing activities, candidates continue to confuse this aspect with the cash flows from or used for financing activities, more so when treating the shares. Of course, here we have an example. When a company purchases shares in another company, this is considered as an investing activity. However, if a company issues shares to the public, it is trying to raise money, and therefore this is treated as a financing activity. Therefore, there is need for candidates to get a firm grasp of what is an investing activity and what is a financing activity under International Accounting Standard 7. Under the financing activities, these are usually answered with is, although majority of the candidates continue not to include dividends paid, which is very, very important. Some candidates leave the section under cash and cash equivalents blank. Those who attempt fail to reconcile the cash balances at the end of the statement of cash flows, especially when an overdraft is introduced in the picture. So as you're reading, focus on the theoretical aspects of this topic. Focus on the preparation of cash flow statements using indirect method. Concentrate on the format, and of course don't ignore the preparation of cash flow statements using the direct method. Next is IS2 inventories. Under this, the poor performance in this area has been caused by the following. One, majority of candidates do not present the correct format of the store's ledger. Majority of the candidates continue to fail to outline the disclosure requirements as per International Accounting Standard 2. Some candidates do not attempt this part at all, indicating that most candidates do not have knowledge on the disclosure requirements of the standard. Where candidates are required to identify a method for inventory valuation which doesn't fall under International Accounting Standard 2. Now this is in regard to section A. Majority of the candidates are unable to identify that the net realizable value is not a method of inventory valuation. So please don't mix up things. The net realizable value is not an inventory valuation method. So as you're reading, focus on the application of different valuation methods of inventory as per International Accounting Standard 2, as well as their presentation and the various provisions of the standard. Revise the accounting concept that is invoked by the International Accounting Standard 2 inventories requirement, which is the requirement of valuing inventory at the law of cost and net realizable value. So you need to practice. There are several numbers in the past papers. Try to practice on them so that you can clearly understand the International Accounting Standard 2 requirement. Finally, we have 17, which is entrepreneurship. Poor performance in this area has been caused or attributed to the candidate's continuous practice of outlining points without giving clear explanations as per the requirement of the question. As you read or as you revise, especially in this area, concentrate on several items, including the term or the meaning of entrepreneur, the steps in the entrepreneur decision-making process, types of entrepreneurs in Uganda. Read and clearly understand the role of entrepreneurship in the economic development of Uganda, sources of idea generation, importance of feasibility study entrepreneurship, problems faced by Ugandan entrepreneurs while implementing their business ideas, entrepreneur ventures versus small businesses, factors that explain the emergence of push entrepreneurs in Uganda, the meaning of business risk, explanations for the characteristics of business risk, meaning of risk management and the steps in risk management process, different types of risks in business, reasons for the slow growth of entrepreneurs in Uganda, reasons why Uganda has a high failure rate of business annually, challenges affecting agricultural entrepreneurship in Uganda, factors determining the emerging of entrepreneurs globally today, and then you can also look at the leadership characteristics of successful entrepreneurs. And of course, I'm saying that for all the areas highlighted here, these exam focus points are not an exhaustive list. The exam focus point is not an exhaustive list. You can continue to look at all the other things that have been highlighted in the syllabus. Main emphasis is on the total or full coverage of the syllabus, and of course we discourage the sporting. We discourage the behavior of sporting topics on the syllabus. So I thank you for your time. and I continue to encourage you to contact us in case you need any materials. For those who are not part of our student group, you can contact us on the WhatsApp numbers. If you are in need of the full or complete financial accounting course, in terms of the lecture videos, in terms of the notes, in terms of the revision kits, and you can also contact us to find out when we are going to conduct our revision. The numbers we are going to touch are very, very important numbers, given the fact that we have looked at what the examiner has highlighted in the comments. And of course, I want us to go through those numbers so that we can deal with the causes of failure. So I wish you all the best for those going for the exam. We wish you all the best. And of course, don't forget that if you finish this, there are more sittings and our intake is open throughout the year. You can always contact us on the WhatsApp numbers to get to know when our intake is open and how we can help you progress in your career. Thank you.